Are you currently looking at a closing disclosure on a mortgage and you are confused? You don't know what you're looking at? In today's video, I'm going to do a video walkthrough of a closing disclosure. I'm going to talk through it. Hopefully this helps you. If you like straightforward mortgage and real estate content from somebody who's in the trenches working in mortgage and real estate daily, subscribe to the channel, like the video, leave a comment. I've got about 1,000 videos up on YouTube, really enjoying the process. I want to hear from you though. I want to hear what you want to see more of, what you want to see less of, something you haven't seen that you'd like me to produce. As an active mortgage broker licensed in 48 states who's doing business across the country every single day, I've got insight that I want to share with you. I want to help educate you, empower you through education. So stay tuned, walking through a closing disclosure. All right, here we go. Let's jump straight into it. Greatmortgagebroker.com if you want to connect with me and my team. Closing disclosure is something, like a lot of mortgage documents, that people just don't fully understand. I like to do these walkthroughs with clients, either with a Loom video that they can watch on repeat or live on a Zoom where I can share my screen and walk and talk through it. As a consumer, you shouldn't be an expert in mortgage. You shouldn't be required to be an expert in mortgage. You just need to work with someone who's able to explain it to you in relatively simple terms. So I took a real closing disclosure from a loan that we recently closed. Of course, I whited out all the personal information, but this is a real life 2024 closing disclosure, just to be able to give you some insight into what it's going to look like come the latter half of your escrow. So you get into escrow on a home, you get an initial disclosure, which is a loan estimate. And then as you get closer to the finality, is that even a word? You get closer to the end of the escrow process where you're looking to close and the numbers get a little bit more refined. You've got your homeowner's insurance number dialed. We know the closing date, how much interest can be collected. You'll get a closing disclosure. These numbers are what you're going to look at to know how your loan is structured and whatnot. And so there's some important things to look at. Closing disclosure, there's going to be some information up here. There's going to be a date on there that this closing disclosure came out. There's going to be your closing date and disbursement date, file number, the property and the sales price. Your information will be on here as the borrower. You're going to want to look over here for the loan information, make sure this is correct. You've got a 30-year purchase fixed rate mortgage. And then they'll even click in here if it's conventional FHA or VA. There's going to be a box on the loan estimate that shows that your loan is locked and how long it's locked for. But as you go down here, there's important information that you at least want to understand at some level, right? Your loan amount. $800,000. In this case, the sales price up here was $1 million. This client was putting down $200,000, so 20%. They had an $800,000 loan and a 6.624 interest rate. Over here to the right, we know it's fixed rate mortgage. Can this amount increase after closing? No, it cannot. Right? So the 6.624% is 30-year fixed rate. In this case, like I'll explain later, we've actually got a 1.0 buy down component to it. So during the first year, it's going to be 5.624 monthly principal and interest payment. Again, if this is a fixed rate loan, that's not going to be able to change. A lot of people have questions. Is there a prepayment penalty? Is there a balloon payment? Most loans that you close that are conventional FHA or VA are not going to have any prepayment penalties. You'll see that on some of the bank statement or non-QM loans. But if you're getting a more traditional mortgage, you're not going to see these. These aren't very common in today's world, but just make sure that that says no for prepayment penalty or balloon payment. All right. So principal and interest, taxes and insurance, otherwise known as escrow account. Then there's a tab here for mortgage insurance. All of these things combined are going to give you your estimated total monthly payment. In this case, if you look in this box, property taxes, yes, they're included and they're going to be paid through escrow, through your mortgage payment. Homeowners insurance, this client opted to pay that separate. So they're going to pay their $2,000 a year, whatever it is, directly to the homeowner's insurance agent. They're not going to pay it through closing. A lot of folks and a lot of you, it's going to say yes and yes. And this payment, this escrow payment, is going to include taxes and insurance in the payment. And in the case where you're putting down less than 20%, if you have mortgage insurance, that will show up here and it'll give you a total monthly payment. Now you've got closing costs, which are going to include loan costs and other costs. Those other costs, as you'll see itemized down below, are prepaying property taxes, prepaying interest, title fees, and all that. And there's going to be loan costs that are origination fees, buy down of the interest rate. There'll be underwriting fees in some cases, processing fees, all of that combined. And so that's the total closing cost. Then you're going to see the number that is your cash to close. By the time you get the closing disclosure, this should be relatively accurate. A couple things can still change. A lot of times this number comes down a little bit because we'll realize that, the days of interest might be less if closing goes out another couple days. Other things might come down. Some title fees might be adjusted downwards. And so this could come down, but this gives you a really good idea of how much cash to close you're bringing. And what you might be wondering is, if there's a $200,000 down payment on this $1 million purchase and there's $800,000 loan, why are they only bringing 172, 293? I'll show you in the details below. This includes what you've paid as a deposit, also known as earnest money deposit, and also if there's any seller credits that are helping pay some of those closing costs. So loan costs are box A, just like the loan estimate you want to see here. This is the only box that the lender really has any say in. So when you're looking at what's my interest rate, what are my costs from the lender, box A is the only lender controlled box. All the other ones are third parties and really are going to be the same no matter what lender you work with. How much you pay in prepaid property tax, how much you pay in daily interest, how much you pay in title and escrow fees. All that stuff is going to remain the same. In box A, you've got 0.38 points. So about $3,000 in points to get us that 6.625. And then you've got a 795 processing. You might see on your loan estimate an underwriting fee. You might see, other fees in here. Box A is all lender stuff. So if you're talking to lender, they should be able to explain to you in detail what any costs in box A mean. And then in box B, you've got your appraisal, your credit report, you've got a MERS fee, you've got tax service. And notice here, you've got at closing down the left column, and you've got before closing on the right column. Some people say, hey, Matt, why is an appraisal fee showing up? I paid that. I used a credit card to pay that already. That's why it moves over to this before closing box, and it's not calculated in the total cash to close because it's already been paid. Then you've got services in box C, which are title fees. The title has their courier wire fee. They've got their endorsement fee, escrow fee, loan tie-in. This for a purchase is going to be title fees that come from the title company that, generally speaking, in most states, the seller chooses the title company and they have these fees. This is something that, is going to vary quite widely, honestly, because we do business all over the place. It varies from Southern California to Northern California. It varies from, state to state, but this is all title fee related. And then down here, you've got the total of boxes A, B, and C, which are those loan costs you saw up here, total in loan costs, right? Plus other costs. And this says 99.11.95. 9,200 of it is still due. 710 was paid outside of closing because the appraisal fee was already paid. Then you've got recording fees. You've got prepaids, which in this case, there's $1,233 being paid directly to the insurance company. Again, we're paying that annual premium to the insurance company, although it's not being collected. and paid through escrow in the future. So every year when this comes up to be renewed, the client is paying it directly, which if it wasn't the case, if they were escrowing it and you were going to pay it through your mortgage payment, you'd see it down here in initial escrow payments, because there's always got to be reserves in that escrow account. If you want a detailed explanation of escrow accounts, I've got a whole video that's got, I don't know, 60,000 views on how to escrow accounts work. Just type into YouTube search, how to escrow accounts work, Matt the Mortgage Guy. I've got a lot of positive feedback on that video. It explains escrow accounts. But for your purposes here, a lot of people are thinking, man, there's a lot of closing costs involved. Well, these are costs that you're going to pay, whether you pay it, no matter who you're working with. You've got to pay 7 months of property taxes, because when this loan closes in February and we've got a first payment due in April, an April tax installment of 6 months taxes is going to be due to the county. So the lender's got to collect 7 months of that to be able to pay out the 6 month installment that's going to be coming due before they even get any payments from you to add money to this escrow account. Again, that's an escrow account thing. Watch that video if you want further explanation of that. Then you've got box H that's also got a title fee in here that pays to the title company. All of this combined, loan fees, other costs, $22,000 in other costs. And so now you've got the $200,000 down payment plus $22,000, $222,000. But like you saw above, there's only $172,000 due. It's because there's a $30,000 deposit that the client has already paid. They've already paid their $710 before closing to the appraisal. And then we've got a big seller credit of $18,793. In this case, and I don't want to complicate this more than it has to be, there was a $25,000 seller credit. $6,200 of it went towards that 1.0 buy down to save the borrower about $500 a month for the first year, and the other $18,000 went towards closing costs. So this box here is important, and it shows you the difference between what was on the loan estimate, total closing costs, the deposit, the seller credits, all of this stuff, and what's on this final CD. And so you can compare and contrast, and what I would encourage people to do, if the total closing cost went from $25,586 to $30,000, why'd they go up? In this case, they came down, and off of memory, I think there was the fact that we pulled the homeowner's insurance being escrowed out, so we didn't have to collect any upfront for that. The days of interest probably came down. It came down almost $3,000 after everything was said and done. So here's a summary down here that shows you exactly, how this is all calculated, how we got to the 172 total cash to close. The seller credit is in here. The deposit is in here. And we've also got a $600 lender appraisal credit, something that my company's doing through the end of March 2024. We're crediting up to $600 on your appraisal if you do a 1.0 buy down. So won't go into any further detail. Hopefully this helps you kind of understand what all is included in this final closing disclosure. It's a lot of stuff. It's a lot of numbers. Make sure you've got a lender that can walk and talk you through it so you understand it. Because in my experience, home ownership can be a stressful process. And when there's numbers and there's things you don't understand, that causes stress. The better you can get somebody to explain it to you in simple terms where you go, okay, I get it, the better you're going to feel about the home buying process, which should be an exciting time. So hopefully this was helpful, longer than I wanted to be, but I wanted to walk and talk through all the lines on this final closing disclosure so that if you have one in front of you, you can look at it and see what it looks like and hopefully understand it a little bit better. Thanks for watching. Till next time.